Welcome back to our channel where we discuss personal finance topics related to stock market investing. Behavioral finance is an intriguing field combining psychology with economics to explain why investors often make irrational financial decisions. This video explores how emotional and cognitive biases affect economic behavior and decision-making, offering insights into the psychological forces at play in the markets. Understanding behavioral finance. Behavioral finance challenges the traditional financial theory that markets are efficient and investors are always rational. It proposes that psychological influences and biases can lead investors to make illogical or detrimental decisions to their financial goals. 1. The impact of psychological biases. Cognitive biases. These are predictable patterns of thought that lead to perceptual distortion, inaccurate judgment, or illogical interpretation. Examples include overconfidence, anchoring, and confirmation bias. Emotional biases. Emotional responses can cause investors to decide based on feelings rather than facts. Fear and greed are prime examples that can lead to panic selling or speculative buying. 2. Key concepts in behavioral finance. Prospect theory, developed by Daniel Kahneman and Amos Tversky. Prospect theory suggests that people value gains and losses differently, leading to inconsistent and irrational decisions. For example, the pain of losing money is more impactful than the joy of an equivalent gain. Mental accounting refers to the tendency for people to separate their money into different accounts based on subjective criteria, which often leads to irrational budgeting or investment decisions. 3. Common behavioral biases in investing. Overconfidence bias. Overconfidence in one's knowledge or predictive abilities can lead investors to underestimate risks and overestimate their investment abilities. Anchoring effect. Investors often anchor to a specific price point or value, which can impede their ability to sell a losing stock or buy a rising one. Herd behavior. Following the crowd can lead to boom and bust cycles, as investors pile into trending investments and exit en masse when fears rise. 4. Examples of irrational investor behavior. Loss aversion. Investors often prefer avoiding losses rather than acquiring equivalent gains, sometimes holding on to losing stocks too long to avoid realizing a loss. Disposition effect. This refers to the tendency to sell assets that have increased in value, while keeping assets that have decreased in value, which can be detrimental to long-term investment performance. 5. Strategies to mitigate behavioral biases. Education and awareness. Understanding common biases can help investors recognize these behaviors in themselves. Diversification. Spreading investments across various asset classes can reduce the risk of emotional decision-making tied to specific investments. Automated decision-making. Using automated investment platforms or rules-based strategies can help reduce the impact of emotional responses. 6. Role of advisors in managing behavioral biases. Objective analysis. Financial advisors can provide an outside perspective to help investors see beyond their biases. Behavioral coaching. Advisors can help investors develop strategies to manage their emotional responses during market volatility. 7. The future of behavioral finance. Growing recognition. As the field of behavioral finance continues to grow, its teachings are increasingly being incorporated into financial planning, policymaking, and investment strategy. Technology and behavioral finance. Emerging technologies like AI and machine learning are being used to understand investor behavior better, predict investor behavior, and improve decision-making tools. In conclusion, behavioral finance offers profound insights into the psychological underpinnings of financial decision-making. Individuals can make more rational, objective, and successful investment choices by understanding and addressing the cognitive and emotional biases that influence investor behavior. If you enjoyed this video, please like it and subscribe to our channel.